For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
This week, the returns in our portfolios were brought to you by the Federal Reserve and their rate cuts. Thank you. Thank you. We're going to jump into the AI secondhand effects portfolio here in a minute, but first, let's discuss what drove returns this week.
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to waste. Join the simple side and end up in first place.
All right, welcome back to the Simple Sides Saturday Sendout. Just some quick reminders for you. Our disclosure is in our email footer. You can go and copy trade our portfolios with autopilot. You can, of course, find this podcast on YouTube, Spotify, Apple Music, or here on Substack. And you can get daily market news from The Simple Side Daily. So you can find all those links at the top of the newsletter, which you can find at thesimpleside.substack.com. Now, let's get into it for today. Like I said, this week's returns were brought to you by the Federal Reserve. And if you're following along with the newsletter, you'll see how the performance was in all my portfolios over this past week. Our AI secondhand effects portfolio is up 6.12%. The tech-focused growth portfolio up 3.88%, and the flagship fund up 0.85%. So around the board, beating the S&P 500 and just generally outperforming. So very happy with how all of that looks. Now, if it just so happens that you were out on a beach somewhere this past week and you did not keep up with the markets at all, don't worry. I'm going to catch you up on everything that happened this past week in the markets. Of course, the best thing that we saw was the Fed finally trimming that 25 basis point cut that we had all been expecting for some time. And as I alluded to earlier, my portfolios and the S&P 500 all did their happy dance, printing fresh highs midweek, I think ending high at the end of the week as well. Of course, anything tied to AI buildouts, software, financing, M&A buybacks, and everything like that getting extra tailwinds in the past run. So, what are some of the moves that mattered from this past week? Well, Elon Musk just decided to write a $1 billion love letter to Tesla. We just saw him buy 2.57 million shares? 2.57 million shares of Tesla, which is not just a tweet, it's a wire transfer, an insider buy that reflects ridiculously, bullish sentiment from the CEO. That is $1 billion in Tesla stock for those of you that are keeping track. And of course, I'm going to highlight that down below in our weekly insider trade section as well. But what an insane buy by Elon Musk there. What else do we have? Well, we had NVIDIA, who recently was told no longer will they be selling to China. I think China had said their company should no longer be buying chips from NVIDIA, which is quite interesting. Part of the reason that I talk later on about looking at divesting from the US dollar by investing in places like China is because canceling buying NVIDIA chips most likely means that some of the companies in China are close or approaching or feel like they have a good runway to reach the same level as NVIDIA's chips, which of course poses an incredible opportunity to China to kind of decouple from the US. Just as we're decoupling from them, they're doing the same thing to us. And so, again, if the dollar continues to decline, these companies in China could be an incredible bet. Alphabet, also known as Google, just committed 5 billion euros to a UK AI data center. So more local compute, lower latency, easier compliance, and jobs, of course, in the UK. This is a big move for Google, specifically in the UK, because they love to attack these big companies with their regulations. And so someone putting in $5 billion is likely going to save them a little bit when it comes to future regulatory battles. Of course, we're all up to date on Oracle, which has been on a crazy run because they continue to ramp up their cloud compute. And of course, they've now announced that they're going to be anchoring the consortium that's going to be buying the US side of TikTok. So just incredible things on that side of the world. Of course, there's a lot of healthcare power plays happening. Ozempic is beating Trulicity on heart outcomes, which of course is a rally for Novo Nordisk. And a couple other big things happening there. And Microsoft lifted its dividend 9.6%. Just a crazy, crazy move. And people are saying that Microsoft stock is falling out of favor. Those that are saying that, I think, are so violently wrong. I think Microsoft controls so much, and people just have no idea what they're getting into when they say Microsoft is quote unquote lagging. Netscope, of course, is a new cybersecurity IPO. I'll talk about this in a little bit. It raised $908 million at their IPO. Very interesting company there. And of course, I love cybersecurity stocks right now, so we'll be paying attention to that. One thing that I alluded to earlier was highlighting our AI secondhand effects portfolio, and a couple of the companies that showed up this week in the top gainers list in the entire stock market. That was SMR and LEU, both of which are parts of my initial contrarian trades I made on energy back in November of 2024. And I've put the old article link in the newsletter, so you should be able to go in and read that and look at that. You'll notice now, if you start watching some of the news stories coming out of people like Market Watch, the Wall Street Journal, Financial Times, and Seeking Alpha, you're going to be seeing a lot of stuff about how energy is the next big play, energy is the next big bet. Oh, everybody needs to get in on energy, and nuclear is going to be driving everything. Well, they're all a year or two late as far as I'm concerned, but that's what these companies are made to do. They're made to sell you the hot news at the current time. And the reason I wanted to highlight SMR and LEU out of the AI secondhand effects portfolio is I wrote about them back in November of 2024. And of course, there's a link to the original article in today's newsletter. But since I wrote about them and invested in both of them, the stocks have returned 320 and 103% respectively. And the reason that I'm bringing them up today, of course, is because they were top gainers on Friday, with SMR landing at a number 5 position with a 22.69% return, and LEU ending at the 11th spot with 12.12% returns. The reason I bring this up is because I don't make very many changes to my portfolios or my investments, and I spend a lot of time researching and then buying and DCAing into the same group of stocks for months or years. I make very few adjustments to the portfolios, and that investment style is honestly the worst for somebody who writes a newsletter, because the way for the newsletter to make money and for me to be able to keep doing this, I have to sell you subscriptions. And to sell you subscriptions, I should be shilling you articles like, this microcap is the next 100x for your portfolio. You know, here's a great lead up, and then buy my newsletter. But that's not what I do. I spend my time researching. I find 1 to 2 great topics, and then I send it out to everybody and I say, this is going to make a lot of money in the long run, and I do some investing. Now that means I don't send out a lot of articles, again, with topics like, look at this great micro cap that's going to 100x your portfolio. But what it does do is it provides large asymmetric upside bets like the ones that we're seeing now in the AI secondhand effects portfolio. I mean, I knew this was going to be a big deal back in 2024. Wrote about it and sent it out. But of course, like, I haven't written an article every other week saying, go buy this company, it's going to 10x your portfolio, because the initial buys that I made are the ones that are going to outperform. And we can see that with LEU and SMR. And really, if you go back and look at all of the trades that I suggested back then, they've all been just doing incredibly, incredibly well. I think the average return for that portfolio since November is over 50%. So just incredible investments there. But I just want to remind you that I'm not going to be sending out a ton of newsletters saying, go buy these stocks, go buy this stock, this is the next big stock. However, in the long run, I will be giving you outsized returns. I just want to remind you that quality over quantity is going to win every time in the stock market. And the best person to look at to prove this point is, of course, Warren Buffett, who does a shareholder letter every year and is managing 20%, 19% returns since his investment career started. So Anyway, I just wanted to call that out for you guys, for everybody that's listening to the podcast, reading the newsletter, and is expecting to see a shill. This is the next stock to make you 10x. This is the next stock to make you 20x. It's not going to happen. But in the long run, we are going to outperform. All right. I will let you guys get into the insider trade updates on your own, but I do want to highlight a couple of things. Of course, the first is Tesla CEO, Mr. Elon Musk, buying $1 billion worth of Tesla stock, which is very interesting. And I'm somewhat weary of Elon when he makes plays like this, because you don't really know if he's doing it to make a splash, to stay in the news, or if he's doing it because he really believes in the future of Tesla. I believe Tesla's at like all-time highs right now, so it's an interesting time for him to be buying in like this, but only the Lord knows what the future is going to hold for Tesla. I'm not invested in the company. I like what they do. I do not like the product, and I wish him the best of luck on that. Another thing that I want to call out is BlackRock Coffee Bar, where a 10% owner bought around $62 million worth of the stock, and that's when they went IPO. So right when they IPO'd, the owner bought $62 million worth of stock, which I think is just an incredible sign. Buying your company right at IPO, saying this is the most undervalued we're going to be for the next 5-10 years, is quite a big signal. The other thing that I like here is AMR. There was a director that bought 108,000 shares, around $16 million worth. Of course, this is a staple in the portfolio of a guy named Mohnish Pabrai, who's been dubbed the Warren Buffett of India. I'm not sure if AMR is still a staple in his portfolio, but that is a big, big deal, if it still is. I mean, it used to be like one of 2 or 3 positions that Mohnish had. And so if he still has that and this guy's buying in, it might be a very, very good tailwind signal to get into that company. Like I said, I'll let you get into the rest of the insider buys that are right there, because I want to talk about something real quick in our interesting trade ideas section. So, of course, I mentioned earlier about Netscope, and I mentioned BlackRock Coffee, and these are 2 companies that I like a lot. Now, both companies are up around 30% from their IPO prices, and I kind of want to spend some time waiting for these companies to put out more financials, to do kind of a full analysis of what I think about the companies and what I see their future being. But I like both of these companies a lot. Netscope, of course, is cybersecurity, and I've been bullish on that since 2024 as well. I called out the fact that with AI rising and vibe coding happening, I thought we were likely going to see a lot of issues with code, potential security threats with code, and I think companies like Cloudflare and Netscope solve those problems. Cloudflare currently is a position in 2 portfolios, my flagship and tech-focused growth funds, and is already up 18% in both of those. So Netscope I like quite a bit, especially as a new player in the space. Future growth prospects for somebody like that are always very big. And of course, BlackRock Coffee, I think, is the next and really only big-time competitor for coffee chains right now. I went to a couple of BlackRock coffees in Oregon, I believe, and they were incredible. I mean, quite possibly like the best place ever. I never go to Starbucks. I never go to Dunkin'. I would go to a BlackRock coffee every day if there was one near me. Sadly, there isn't, so I can't go and support the company, but I do like them a lot. I think right now they're probably overvalued after all the IPO hype, but I'm going to be watching them and their potential growth and future metrics and be looking at investments in both of those companies. Of course, here's a little highlight down below this. If you're reading the newsletter, you can go look at all of the Berkshire buys that we've done analyses on. They usually sit right here in our interesting trade ideas section, but I didn't have one written for this past week. Had a lot going on outside of the newsletter, so I wasn't able to get to it. But the average return for these companies right now is something like 18%. The top returner being Napco Security, which is up 62% since I originally said that buying in would be a great time. What would you even call that? Buying in would be a great opportunity to buy in. There we go. Jabal, of course, up 32%. CACI International up 37%, Occidental Petroleum up 22%. And not all these make it into my personal portfolios, but NAPCO Security did and Occidental Petroleum did. And of course, those two companies up 62 and 22%, like I said before. So just great performance there. I kind of hit on my portfolio performance earlier, but since we launched on autopilot, our tech-focused growth fund is up 19.89%. Our AI secondhand effects portfolio up 17.05%. And the flagship fund up around 6%. And of course, that is coming from just a month ago when we launched on autopilot. So in 1 month, we're at 20%, 17%, and 6% returns across the portfolios. And you should really be taking advantage of that. Go over to autopilot, subscribe there, and copy trade these portfolios. I think you need a portfolio on Public or Robinhood. I think are their main two brokerages that they work with. So go over there and get that set up. I mean, that is a huge, huge, huge deal, and going to be very, 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 very beneficial. Of course, down below the paywall, I've got all of the links to our holdings, all of our portfolios, all of the current returns that we have in each of those portfolios, and just a quick overview on how I'm feeling about the stocks that I'm holding, some opportunities that I see in the future, and just general information about my strategies and upcoming bets. And then, of course, our weekly picks are down at the very bottom for paying subscribers. As always, it has been an incredible podcast. So happy to spend it with you guys, and I will be seeing you next week.